Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Some good news today coming out of Purpose, or a couple of days ago, with their announcement of their January 2025 distribution. So this is really not surprising to me, but they finally did a massive distribution increase on, here it is, YTSL, right? The Tesla Yield Shares Purpose ETF. So it's been, Tesla's been going up and up and up and up, but they haven't really increased their distribution in a really long time. If you look at the history here, it's been 30 cents a month for quite a while. It actually, at one point, it started about 30 cents here. Then it went to 35, 40. Then it dropped back to 30 with the Tesla drop during that time. But they never really increased it yet until now, because Tesla's been going up and up and up and up. So we've all been waiting for this distribution increase. So great news, everyone. They finally increased it to 55 cents. So they almost doubled it. So quite a significant increase. Remember, everyone, this is covered calls on a single stock on Tesla. So, the premiums they take in with the volatility, there could be drastic swings in it. But hey, some really good news. And if we actually calculate what the yield is now, so right now the yield is under 12% based on this NAV of 3171. This is as of January 20th. By the way, I'm filming this on January the 21st for your record here. So if you do 55 cents times 12, the annual distribution rate is $6.60. This is remember, this could vary. This is just based on if they continue having a 55-cent distribution, which has been the highest so far. So if you divide that by, let's say, 3171 or whatever the stock price is now, you're looking at a yield of just under 21%, so 20.81% yield. So I wanted to make this video because we have a new player, a new option in the game in Canada. We have TSLY, which is from Harvest. So this is the Harvest Tesla Enhanced High Income Shares ETF, and it's actually the same stock symbol as the Yield Max one on the US side, but there's some key differences and we'll go over it. So I know many of you, I've seen in the Facebook group, you're debating should I sell the Purpose one to go into the Harvest one. Well, first of all, let's see what the Harvest one is all about. So the fee, by the way, is the exact same as the Purpose ones. It just came out, guys, just a few days ago. And by the way, in case you missed it, I highly recommend this video here where I talked to Michael Kovacs about their new high income shares. Even their all-in-one HHIS came out, right? HHIS is the all-in-one single stock covered call ETF from Harvest. Unfortunately, Purpose does not have one. They're not come out with it yet. But this combines all the single stocks that they have, including the Tesla one right here, which is TSLY. So if you're trying to decide, okay, what are the differences? Should I swap to the Harvest one? Should I keep the Purpose one? Well, let's try to analyze here what's going on. So first of all, for the TSLY one, the first distribution was declared at 32 cents a month. So based on a starting price of $12, I don't know how much it is now, probably a bit higher than that. It's 32% yield. So it's actually, the yield is actually much higher right now on the Harvest one than the Tesla one, even after the distribution increase. 20% yield on the current price, and this one is 32% yield, right? Based on the first distribution, which could change, very, very important. So the key difference, because the management fee is exactly the same, 0.40. The key difference is the currency hedging. So all the Purpose ones, by the way, they are Canadian currency hedged, right? Does it say that here? It says it somewhere, I'm sure. But take my word for it, they are Canadian currency hedged. What does that mean exactly? Well, if the Canadian dollar gets stronger versus the US dollar, that will benefit YTSL. But the opposite has actually been happening. If the Canadian dollar gets weaker versus the US dollar, that will negatively impact this ETF, right? It will have a negative effect. The TSLY one, the Harvest one, is the exact opposite. It's not Canadian hedge. So if the Canadian dollar gets weaker, this would actually help the fund if that continues to happen. But the opposite is also true. So the biggest question is, Well, the first question you got to ask yourself, which currency do you like and do you believe in more that's going to be stronger more in the future, the Canadian one or the US one? If you believe more in the American dollar, which I have to admit I do, then the TSLY one is obviously has that advantage, the currency advantage. In terms of strategy, it's more or less very, very, very similar, right? One stock, just the Tesla stock with covered calls, same management fee. So the currency hedging is really a big difference. The other difference I would say is the portfolio coverage too, by the way, is very similar, if not the same. They both have 25% leverage as well. That's the same. So very, very similar funds here, guys. Very hard to choose. But another key difference is really the covered call strategy. So the portfolio coverage, and I've talked to Nick Murch about this quite a few times, they're never going to go over 50% portfolio coverage. So half of the portfolio, half of the Tesla shares inside this ETF, there's no covered calls on it, so you have the organic growth. And by the way, just for the record, the TSLY one in the US, it's 100%, right? 100% coverage. Also, doesn't have leverage, whereas the Canadian ones do, which I definitely like. So this one here, we actually have and it's the same thing for Harvest, by the way. So Harvest, again, watch this video if you haven't caught it. But Michael Kovacs confirmed that their right level is at about 33%, but it could go up to 50%. So both providers are not going to cover more than 50%. But the Harvest one obviously has more yield, which means they're probably doing more covered calls. So I think the major difference besides the currency hedging is the moneyness of the option. So if we actually look at, and I've been watching, YTSL for a long time. It's been out for quite a while. The moneyness of the options. Right now, they're all they're all within the strike price, right? They're all going to be exercised because Tesla's been going up and up and up. But I've been watching this for a long time. And the Purpose typically writes at many strike prices, and some of them are 4% out of the money, 8% out of the money, even 12% out of the money. So I think, my opinion here, considering even the yield that it's much lower, we're going to have to assume, or I'm going to assume here, that you're probably going to have less, the options are going to be more out of the money with Purpose, which means you're going to capture more upside if Tesla goes up, but you're getting less premium or downside protection or yield or income, right? Obviously, we could see that with the current yield of 20% here with YTSL and a starting yield of 32%. Based on a $12 price with the TSLY. And just like Michael Kovacs, I'm always about to say Michael Saylor, but it's Michael Kovacs says in his, because I asked him about the moneyness of the options. I recommend you watch the video in case you haven't watched it. He says that the right level is going to be about 33%, could go up to 50. So similar to Purpose, I believe. Maybe Purpose writes 50 more, but their options are more out of the money. But Harvest is going to have more slightly out of the money. So he said the options are going to be slightly out of the money or sometimes even at the money. So the moneyness of the options are definitely closer to the strike price, right? They're more aggressive, you could say. So obviously giving up a little bit more upside, but you're getting more premium, you're getting more yield. So that's really the difference between the two. So again, the currency hedging, and I believe the Harvest one is actually going to have more yield because there's more options, or the options are more aggressive, so to speak. So it's really up to you which one that you think is best for you. And again, if you really don't want any single stock risk, you even have HHIS as an alternative option, which Tesla is 11% of HHIS. And don't forget, Tesla's a pretty high up there in the indexes, in the NASDAQ and the S&P 500. But hey, if you really, really love Tesla, you believe in the company, you're trying to choose between these two, my prediction is that the performance will be very, very, very similar, everyone. The management is the same. The assets is the same. They both have 25% leverage. But I think, you're going to capture a little bit more upside right now with the Purpose one than with the Harvest one. But the Harvest one, you're going to get more yield. So it's really up to you of which of those two factors are more important. And of course, there's the currency hedging as well. So That's it for this video. Just wanted to make a quick one because obviously YTSL, now TSLY, very, very hot topic in the community. So hopefully this video was informative for you. You know the differences between the two. Again, I think they're going to be very, very similar in terms of performance. But hey, if the Canadian dollar keeps getting weaker and weaker and weaker, that's going to benefit the Harvest one and really hinder the YTSL over a period of time. But I think if Tesla just keeps going up and up and up and up and up, well, the Purpose one is going to capture more upside, but has less yield than Tesla. So it's really up to you to choose. There is no right or wrong when it comes to investing. Hope you enjoyed the video. Give me a thumbs up, please. I would really appreciate it. See you next time.